Devon Energy, DVN, recently raised its fixed and variable dividend to $1 quarterly, giving it a 6.48% yield. This could potentially increase, as the variable portion of the dividend rises with higher free cash flow, FCF, if the oil price stays over $100, potentially reaching $4.68, 7.59% yield. Devon has dramatically expanded its buyback program to $1.6 billion, or 3.9% of its market capitalization, its buyback yield to shareholders. The total yield to shareholders, 7.59% dividend yield plus a 3.9% buyback yield, could be 11.49% over the coming year. Devon Energy was the best performing stock in the S&P 500 last year. This was because of its huge dividend and generous share buyback policy. So far this year it's up 40% already as of March 23 at $61.67 per share, after ending last year at $44.05. However, DVN stock could rise significantly from here, as investors come to appreciate its new share repurchase policy and its dividend yield potential. This article will explain how that works out. Devon Energy's total yield. Recently Devon's decided to expand its buyback policy. On February 23 the company raised its buyback authorization to $1.6 billion. That represents a large portion, almost 4%, actually 3.9%, of its $40.96 billion market capitalization at today's price. To value investors, this 3.9% rate is known as its buyback yield. On top of that, Devon's $4 per share annual dividend, $1 quarterly, which includes a fixed and variable portion, gives investors a dividend yield of 6.48%, i.e., $4.00/$61.67. But the dividend could potentially rise to $4.68 annually. That would raise the dividend yield to 7.59%, i.e., $4.68/$61.67. As a result, Devon's total yield to shareholders, buyback yield plus dividend yield, could be as high as 11.49%. Here is how the dividend could rise to $4.68 from $4. Calculating its potential higher dividend yield. This can be seen if we use Devon's own forecasts for its revenue and estimate its free cash flow. Just like Chesapeake Energy, check, Devon pays out a fixed portion and a variable portion, which combine total $1 per quarter. But, as I explained in my recent article on Chesapeake Energy, the variable portion of the dividend takes up most of the total dividend payment. This is because both companies pay 50% of their adjusted free cash flow, FCF, after deducting the fixed or base, in Chesapeake's case, portion of the dividend cost. This 50% portion becomes the variable portion of the dividend, which varies with the quarter's FCF generation. So, as you might surmise, that is mostly a function of the price of oil and gas, and the total volume of barrels of oil equivalent that are sold. For example, we know that in 2021 Devon produced 209 million barrels of oil equivalent, MMBO, based on page 10 of its 10K. As its revenue for the year was $12.206 billion, that implies that its average barrel of oil price equivalent was $58.40 for the year. But so far this year, it is probably making twice that amount. Just to be conservative, let's say that it makes $100 per barrel this year on average. For example, in its 2022 guidance, Devon said that it will produce 570,000 to 600,000 barrels of oil equivalent daily. That works out to an annual rate of 208 million barrels of oil equivalent, MMBO, to 219 MMBO. Therefore, if we multiply these MMBO forecasts by $100/barrel, you can see that revenue will skyrocket to between $20.8 billion and $21.9 billion. Again, that is up from $12.2 billion last year, or a rise of 70.5% to 79.5% in sales this year. Moreover, last year, the company's operating cash flow margin was 40%, i.e., $4.899 billion/$12.2 billion. Therefore, this year we can assume that its operating cash flow will be about $8.5 billion at the midpoint of the revenue targets. After deducting the fixed dividend payments of $106 million and $2.44 billion in capital expenditure, CAPEX, from its guidance, its FCF will be $5.966 billion. The variable dividend deducts 50% of FCF, so it could be $2.98 billion. Let's call it $3 billion. Since there are 664 million shares, the variable dividend could be as high as $4.52 per share this year. After adding back the 16 cents in fixed dividends, the total dividend this year could reach $4.68 per share. That is 17% over the $4 present dividend rate. What to do with DVN stock? If DVN stock has a $4.68 per share dividend, the yield at today's price of $61.67 will be 7.59%. That is why DVN stock could have a total yield to shareholders of 11.5%, i.e., 7.59% dividend and 3.9% buyback yield. But what will happen to the stock price if the dividend is raised? I suspect the stock will rise, from a 7.59% yield to a 6% yield. This means the stock will rise to $78. That is seen by dividing $4.68 by 6.0%. The result is $78 per share or 26.5% over today's price. In other words, by assuming the average realized oil price this year will be $100, and using a 6% dividend yield, we can estimate the DVN stock price will rise 26.5% more. If the yield falls to 5%, the stock will rise to $93.60, i.e., $4.68/0.05, or 51.8% higher. So, you can see that even though DVN stock is up 40% YTD, it could still easily rise between 26% and 52% higher. But even if it doesn't, investors can take comfort in that DVN stock will likely have an 11.5% total yield this yield.